Imagine opening your eyes in the morning, reaching for your mobile device, and reviewing your bank account like you normally do. Everything appears usual initially. Your available funds are present, your incoming payments processed successfully. Nothing appears unusual. However, in the background, something has shifted, and the majority of individuals are completely unaware this is occurring. Because beginning in 2026, a specific threshold, $10,000, may quietly establish whether your financial actions get marked, examined, or challenged. And here's the element that's surprising so many individuals. It's no longer exclusively about substantial transactions. It's about sequences, frequency, and how your funds transfer. Even when every cent belongs to you, even when you've done completely nothing incorrect. For countless retired individuals living on limited resources, handling finances cautiously, assisting relatives, or simply transferring funds between different accounts, typical actions can unexpectedly appear questionable to a framework that doesn't recognize you, doesn't understand your background, and doesn't consider purpose. And when you're under that scrutiny, what follows next can vary from a basic notice to something considerably more challenging. So the genuine concern is what truly transformed and why are so many older adults at risk without even understanding it. Hi, I'm Sophia, and in this presentation I'm going to guide you through precisely what this $10,000 threshold genuinely represents heading into 2026, what's truly evolving in the background, and why it's impacting older individuals more than nearly anyone else currently. We're going to examine this in a straightforward, useful manner. No technical language, no scare approaches, just what you must understand to safeguard yourself and remain in command of your finances. I'll additionally demonstrate real-world examples that appear entirely typical on the exterior, but may activate scrutiny under the present framework. And most significantly, what straightforward actions you can implement to prevent issues before they ever begin. Because when you comprehend how this operates, the complete situation becomes considerably more controllable. But there's one illustration in particular that makes all of this very tangible, and it begins with someone just like you. Let me present you to Patricia. She's 71 years young, a former educator who dedicated over 3 decades in education. She maintains a peaceful, organized existence, and like numerous retired persons, she handles her own finances thoughtfully. Every month, her government retirement benefit is transferred into her account. Occasionally, she moves funds from her reserves to handle bigger costs, a healthcare expense, a property maintenance, a trip to visit her descendants. Nothing uncommon, nothing concerning, just the type of financial pattern countless older adults maintain every single day. She's never attempted to conceal funds, never overlooked obligations, never done anything even slightly problematic. But here's where circumstances take a shift. Under the frameworks now being utilized and broadened heading into 2026, Patricia's entirely typical actions could begin to appear irregular, not to an individual, but to a computerized framework trained to identify sequences. Because the framework doesn't recognize a former educator handling her reserves, it recognizes transactions, movements, frequency, and quantities. And if those sequences don't precisely correspond with what's documented on record, they may activate scrutiny. Not because something is incorrect, but because something doesn't completely align. And this is precisely where so many individuals get surprised. Because to comprehend why Patricia and countless like her could become under that scrutiny, you must comprehend where this complete framework originated. This goes all the distance back to 1970 when the United States enacted a regulation called the Bank Secrecy Act. At the period, the objective was direct. Provide the authorities a method to monitor serious financial violations like money laundering, illegal trafficking, and obligation evasion. As part of that regulation, financial institutions were mandated to document certain categories of transactions, specifically any currency transaction or removal of $10,000 or higher. That documentation is called a currency transaction report, and for many years, that $10,000 limit has remained precisely the identical. But here's what the majority of individuals don't understand. That figure was established over 50 years previously. Calculated for economic changes, $10,000 back then would be roughly comparable to around $80,000 currently. In other terms, what was previously regarded a substantial, unusual transaction is now something considerably more typical in regular financial existence. Retirement withdrawals, property-related costs, even particular categories of reserve movements can readily reach that amount without creating any genuine world worry. But the framework never modified. The figure remained unchanged in history. And now, as financial participation has increased and transformed, more and more typical individuals are approaching a limit that was never created for today's circumstances, which creates a significant concern. If the regulation itself hasn't transformed, why does it unexpectedly feel like the danger is growing? And the response to that concern begins with something the majority of individuals have never even discovered. But it's one of the primary reasons accounts get marked currently. It's called structuring. Now, in theory, structuring is quite straightforward. It's when someone deliberately separates a substantial transaction into lesser quantities to prevent activating that $10,000 documentation obligation. For illustration, instead of transferring $15,000 all immediately, someone might transfer $9,000 currently, another $9,000 the following day, and maintain everything just under the limit. That sequence, even though each separate transaction is under $10,000, is regarded a warning indicator, and in significant instances, it may truly be handled as a national violation. And when you discover that, it likely sounds logical. The concept is to identify individuals who are intentionally attempting to conceal funds. But here's where circumstances begin to get challenging, because the framework doesn't truly recognize purpose. It doesn't recognize why you completed those transactions. It exclusively recognizes the sequence. And that's precisely where older adults, more than nearly any other category, begin to encounter difficulty without understanding it. A lot of mature Americans didn't develop in a society of electronic banking and computerized monitoring. Many still favor currency. Some maintain funds at residence. Others complete lesser, more regular transactions simply because that's how they've always handled their finances. It feels protected, more supervised, more recognizable. But to a computerized surveillance framework, that identical actions can appear almost matching to someone attempting to prevent documentation regulations. And that's the separation. What feels typical to you can appear questionable to a framework that's exclusively trained to identify sequences, not comprehend individuals. There have been genuine situations where persons, completely law-following, had their accounts marked simply because their transaction practices didn't match what the framework anticipated. No unlawful purpose, no concealed revenue, just a difference between individual actions and technology understanding. And when that indicator is activated, it may initiate a series reaction that the majority of individuals are not equipped for. Because this doesn't just conclude at a documentation being submitted somewhere in the background. In some instances, it advances. Accounts may be examined more thoroughly, transactions may be challenged, and in more significant situations, especially when structuring is believed, assets may truly be restricted while circumstances are examined. There have been recorded instances where persons had tens of thousands of dollars secured for months, sometimes extended, simply because their transaction sequences create worries. And what makes this even more challenging is how the procedure operates when that occurs. In particular situations, the responsibility transfers to you to demonstrate that your own funds are valid, not the opposite direction. That indicates collecting documentation, clarifying transactions, sometimes even securing professional assistance just to restore availability to assets that were yours to start with. For someone living on a limited revenue, that type of interruption isn't just troublesome, it may be economically harmful. Now, to be specific, this is not what occurs to the majority of individuals. Countless transactions are documented every single year, and the great majority never result to any continuation at all. But the explanation this is significant, especially now, is because the framework that establishes which instances get scrutiny is evolving. And that's the element that brings us straight into what's occurring next, and why 2026 is such a critical point. And this is where circumstances change in a manner that the majority of individuals haven't completely understood yet. Because heading into 2026, the primary transformation isn't the $10,000 regulation itself. It's how that regulation is being utilized. For many years, these documentations mostly remained in enormous repositories with restricted capacity to evaluate them in a significant instantaneous manner. There was simply excessive information and insufficient innovation to associate all the elements. But that's no longer the situation. The tax authority now has considerably more resources, more sophisticated frameworks, and considerably more advanced instruments created to evaluate financial information at magnitude. What used to demand physical examination may now be completed automatically. Sequences may be identified immediately. Transactions may be compared against your documented revenue, your obligation submissions, and your financial background without any individual ever examining it first. So, what does that truly indicate in simple terms? It indicates the framework is no longer just gathering data, it's understanding it. If funds transfer into your account, the framework may inquire, does this correspond with what this individual states to receive? If there are repeated transactions, it may inquire, does this sequence resemble recognized danger actions? If there are differences, even minor ones, it may mark them for additional examination. And all of this may occur quietly in the background without you ever recognizing it's occurring. The regulation didn't transform, but the application did. And that one change is what's making the $10,000 limit more applicable and in some instances more concerning than it has ever been previously. Now, this impacts everyone to some extent. But older adults are in a distinctly exposed situation within this framework. And the explanation comes down to how retirement finances truly operate in actual existence versus how they appear on record. During your employment years, revenue tends to be foreseeable. You obtain a payment, obligations are removed, everything is relatively direct. But in retirement, that organization transforms entirely. Revenue begins arriving from various origins: government benefits, employment pensions, retirement funds, reserves, and it doesn't always maintain an organized, steady sequence. One month might be peaceful, the following might incorporate a bigger removal, a movement, or a single-time transaction. To you, it creates complete logic. But to a computerized framework searching for steadiness, those differences may be noticeable. Take retirement withdrawals for illustration. If you remove funds from a retirement account or a retirement plan, especially for mandatory yearly withdrawals, those quantities may readily surpass $10,000 depending on the magnitude of your reserves. That transaction gets documented. And if your obligation documentation doesn't precisely represent or clarify that transfer of funds in a manner the framework may rapidly correspond, it may create concerns. Not because anything is incorrect, but because the framework is created to mark what it doesn't immediately comprehend. The identical circumstance applies to other typical situations older adults encounter: transferring funds between accounts, combining assets, or handling substantial irregular costs. These are typical financial choices, but they don't always appear typical through the perspective of computerized evaluation. And that's genuinely the primary concern. It's not that older adults are doing anything incorrect. It's that their financial existences are more intricate, more changeable, and more probable to generate sequences that don't precisely correspond with what the framework anticipates. Which is precisely why particular regular situations, circumstances numerous retired persons complete without a subsequent consideration, are becoming some of the most typical activators for scrutiny. And when you recognize what those situations are, you begin to understand just how simple it is to unintentionally fall into one of these sequences without even recognizing it. So let's examine the situations that are significant most, because these are the precise moments where entirely typical financial actions may begin to appear problematic from the exterior, even when everything is completely valid. The first one is retirement withdrawals. This is one of the most typical activators, and nearly no one considers twice about it. You've dedicated many years developing your reserves, and now you're obtaining from those accounts to maintain your existence. Maybe it's a mandatory yearly withdrawal. Maybe it's a bigger removal to handle a significant cost like property maintenance or healthcare expenses. Either manner, it's your funds. But if that withdrawal exceeds particular limits, especially around or above $10,000, it gets documented. And if the frequency or quantity doesn't precisely align with what's represented on your obligation documentation, even briefly, it may create an indicator. Not a determination, just a concern. but that concern may be adequate to position your account on the scrutiny. The subsequent situation is providing funds to relatives. This is something numerous older adults take satisfaction in. Assisting offspring, supporting descendants, participating to significant existence moments like learning or purchasing a residence. And in the majority of instances, it's entirely permitted. But the manner those contributions are provided is significant more than the majority of individuals understand. Substantial movements, repeated movements, or currency-focused contributions may all generate sequences that appear irregular if they aren't precisely recorded. The framework doesn't recognize kindness. It recognizes transfer of assets, and if those transfers aren't simple to understand, they may activate scrutiny, especially when various transactions happen within a brief duration of period. The third is significant existence changes like disposing of a residence or obtaining an estate transfer. These are substantial financial moments, often comprising substantial single amounts that transfer through your accounts all immediately. Maybe you're reducing, moving, or managing a relative property. The figures comprised may be considerable, sometimes considerably beyond that $10,000 limit. And while these transactions are completely valid, they may generate brief increases in your financial participation that be noticeable sharply compared to your typical sequences. Again, it's not that anything is incorrect, it's that the framework is created to recognize when something transforms unexpectedly. And the fourth situation is one that remains unnoticed for a lot of individuals, currency-focused practices, or casual financial structures. This incorporates circumstances like disposing of individual possessions, gathering property payments, or even assisting a relative by briefly maintaining funds and then moving it subsequently. These situations often comprise currency or various lesser transactions. And when those transactions begin to establish sequences, especially sequences that resemble structuring, they may create worries. What feels like straightforward, regular funds handling may appear very distinct when it's converted to information elements on a display. Now, here's where it becomes especially significant to comprehend what occurs next. Because when a transaction or sequence is marked, it doesn't automatically indicate there's an issue, but it does indicate your data enters a framework created to examine more thoroughly. When a financial institution submits a documentation, whether it's connected to a substantial transaction or a questionable sequence, that data is transmitted to a national repository handled by the Treasury Department. From there, it becomes reachable to organizations like the Tax Authority, which utilize their own instruments to evaluate whether anything requires additional scrutiny. In numerous instances, nothing occurs at all. The documentation remains there part of a considerably bigger information collection never responded upon. But if something is noticeable, if there's a difference, a sequence, or a concern that can't be readily resolved by the framework, that's when it may transfer to the following action. And that action is typically communication. It might begin with a notice requesting for explanation about particular transactions. Direct, but still concerning if you're not anticipating it. In other instances, it may advance into a structured examination where your financial documentation are examined more thoroughly over a duration of period. And in more significant situations, particularly when sequences resemble structuring or unexplained currency movement, the results may become more prompt, accounts may be limited, assets may be briefly restricted. And in uncommon but very genuine instances, official procedures may begin that demand you to actively demonstrate where your funds originated from and why it transferred the manner it did. That's the element that surprises individuals, because at that moment, it's no longer just about comprehending the regulations. It's about replying to them under tension. Now, before this begins to sound excessive, there's something significant you must recognize. Because while all of this is genuine and the dangers are growing, there's another aspect to this that the majority of individuals never discover, and it transforms how you should consider everything we've just examined. Now, here's the element that nearly never gets clarified, but it entirely transforms how you should consider all of this. The great majority of these documentations never result to anything. Countless upon countless transactions are marked, documented, and preserved every single year. And the majority of them are never examined by an individual person. No notice, no examination, no continuation, nothing. And that's significant because it indicates the framework isn't created to pursue every retired individual who transfers funds in a moderately irregular manner. It simply wouldn't be achievable. But, and this is the primary change, the framework is improving at focusing its concentration. It's no longer about quantity, it's about accuracy. With more sophisticated instruments, improved information coordination, and computerized evaluation, the tax authority doesn't require to examine everything. It just requires to recognize the sequences that be noticeable the most. And that's why the danger, while still relatively minimal on an personal amount, is growing in a very particular manner. It's becoming more concentrated, more particular, more reliant on whether your financial participation is simple to comprehend or perplexing when observed through information alone. So the genuine objective here isn't to prevent the framework completely. That's not practical. The objective is to ensure that if your financial participation is ever examined, it creates logic immediately. No speculation, no uncertainty, no unanswered concerns. And this is where circumstances change from recognition to command, because there are a few straightforward, useful actions that create a substantial distinction. And the first one is also the most effective. Maintain precise, structured documentation of your financial participation. Not just your periodic statements, but anything connected to bigger or less regular transactions. If you dispose of your residence, maintain the finalization records. If you obtain an estate transfer, maintain the documentation that demonstrates where that funds originated from. If you obtain a withdrawal from a retirement account, preserve the statements that clarify it. And if you provide funds to a relative, document it. Date, quantity, and objective. Because if a concern ever arises, the distinction between a rapid resolution and an extended concern often comes down to one circumstance: records. The framework may mark a transaction, but it can't challenge with a precise documentation sequence. The subsequent action is collaborating with the appropriate type of expert. And this is especially significant for older adults because retirement finances are not as straightforward as they used to be. A certified obligation expert, someone who comprehends retirement revenue withdrawals and documentation obligations, may assist you organize circumstances in a manner that is both agreeable and simple to clarify. They may ensure your obligation submissions represent what's truly occurring in your accounts, so there are no separations. They may also direct you on circumstances like contribution documentation, substantial movements, and frequency. Minor modifications that may prevent perplexity subsequently. This isn't about completing anything distinctly in a significant manner. It's about ensuring everything corresponds precisely across the system. And the third action might sound opposite at first, but it's essential. Prevent attempting to remain unnoticed by separating transactions. If you require to transfer a substantial quantity of funds, complete it organized in one transaction and record it appropriately, because various lesser transactions that decrease just under $10,000 may appear considerably more questionable than a single bigger one that is precisely clarified. This is one of the most typical errors individuals complete, not out of negative purpose, but out of precaution. They consider they're being thoughtful when in circumstances they're generating a sequence that obtains more scrutiny. Openness, when it's supported by records, is always the protected direction. Now, there are a few more actions that become just as significant when you comprehend how this framework truly operates, especially when it concerns your protections, your relatives, and situations that the majority of individuals never consider twice about until they become an issue. The following level of safeguard comes down to something a lot of individuals don't consider about until it's too delayed, and that's comprehending your protections and how to reply if you're ever communicated. Because if you obtain a notice or a communication, the most negative circumstance you may complete is worry or disregard it. These situations are nearly always controllable when managed appropriately. You have the protection to comprehend why you're being communicated. You have the protection to reply with records. And most significantly, you have the protection to legal support. That indicates you don't have to determine it out on your individual. A certified obligation expert or legal professional may participate, communicate on your account, and ensure everything is managed appropriately. In numerous instances, what appears significant at first is resolved with precise documentation and a straightforward clarification. But frequency is significant. Replying promptly, peacefully, and appropriately, may prevent a minor concern from becoming something considerably bigger. Another action that becomes extremely significant, especially for older adults, is ensuring that any financial assistance between relatives is managed in a manner that's simple to monitor and clarify. This is where a lot of perplexity may occur without anyone understanding it. Maybe a mature offspring is assisting handle costs by transferring funds into your account. Maybe you're assisting a descendant and transmitting assets frequently. On an individual amount, it's straightforward and kind. But from the framework's viewpoint, repeated transactions, especially in currency or irregular quantities, may begin to establish sequences that don't immediately create logic. And again, the framework doesn't comprehend connections, it comprehends information. So the optimal manner to manage this is to generate understanding. Utilize approaches that create a documentation like payments or computerized movements, and maintain records about what those movements are for. It doesn't require to be challenging. It just requires to be precise. And then, there's something that often remains unmentioned, but it performs a very genuine function in all of this. Existence transforms. As individuals get mature, handling finances may become more intricate. Not necessarily because the funds is challenging, but because the frameworks around it are. Some older adults begin to depend on relatives to assist handle accounts, complete expenses, or transfer funds. Others establish computerized movements or combined availability without completely revisiting how everything is organized over period. And in situations where recollection or mental precision begins to reduce, even moderately, it becomes simpler for transactions to occur without a complete comprehension of how they might appear from the exterior. That's not a deficiency. It's a circumstances numerous relatives encounter. But it does grow the significance of having the appropriate safeguards in position. If you're assisting a guardian or family member handle their finances, ensure everything is established appropriately. That indicates having official permission, like an authority of legal representative, so there's no concern about who is handling the account and why. It also indicates maintaining thorough documentation of anything you complete on their account. Every movement, every expense, every transaction should be simple to clarify if required. Not because you anticipate an issue, but because if a concern ever develops, you're equipped to respond it immediately and precisely. That amount of structure safeguards both the individual handling the funds and the individual whose funds it is. Because at the conclusion of the day, the majority of the concerns that emerge out of this framework aren't caused by violations. They're caused by perplexity. Separations between what truly occurred and what may be precisely demonstrated. And when you eliminate that separation, you significantly reduce the possibilities of ever encountering an issue in the first position. But there's one more area that merits scrutiny because it's not just about how the framework recognizes you, it's also about how negative participants may exploit it and how rapidly a typical situation may convert into something considerably more significant if you're not conscious of what to search for. One of the most disregarded dangers in all of this has nothing to complete with the tax authority straight, but it may still involve you into the identical type of difficulty, and that's financial frauds. Because currently, there are unlawful persons specifically focusing older adults with directions that sound straightforward, critical, and strangely particular. They might request you to remove currency, transfer funds in lesser quantities, or transmit assets in a manner that prevents scrutiny. They'll often generate a perception of tension, informing you it's period critical, private, or connected to something significant like a relative crisis, an official concern, or even a supposed authority demand. And in the moment, it may feel persuasive, but here's the concealed risk. Those precise directions, transferring funds in lesser quantities, responding rapidly, preventing typical channels, may generate sequences that appear precisely like structuring or questionable participation. So, not exclusively, may these frauds obtain your funds, they may also create behind a financial sequence that creates warning indicators in the framework. From the exterior, it may appear like you were deliberately attempting to transfer funds in a particular manner when in circumstances you were being controlled. And that's what makes this so significant, because when those sequences exist, they don't arrive with background. They don't clarify that you were under tension or deceived. They just demonstrate what occurred. That's why one of the most significant practices you may develop is this. Anytime you're requested to transfer funds in a manner that feels irregular, hurried, or private, delay. Obtain an action back. Communicate to someone you rely on before completing anything, a relative, a financial consultant, even your financial institution, because one discussion may prevent a situation that's not exclusively economically harmful, but extremely challenging to resolve afterward. And beyond all the regulations, the documentation, and the frameworks, there's a more profound concern here that a lot of individuals experience, but don't always express openly. It's that perception of being observed, of having your financial existence supervised after many years of completing everything the appropriate manner. For numerous older adults, that sensation isn't just annoying, it feels individual. You labored, you preserved, you maintained the regulations, and now it may appear like typical actions is being observed with doubt. And that pressure is genuine. On one aspect, there's a requirement to prevent significant financial violation. On the other, there's a very individual wish for confidentiality, freedom, and command over your own funds. That equilibrium isn't complete, and it likely never will be. But comprehending how the framework operates provides you something significant. It provides you command within that framework. Because when you recognize what activates scrutiny, when you comprehend how your financial participation is being understood, you're no longer speculating. You're completing informed choices. You're recording what is significant. You're preventing sequences that may be misunderstood. And that changes the complete experience from doubt to understanding, because this isn't about transforming your existence or being concerned to utilize your own funds. It's about ensuring that the manner you handle it is as precise on record as it is in circumstances. And when you complete that, the majority of the danger we've discussed about simply disappears into the background where it belongs. Now, examining forward, there's one concluding element you require to comprehend, because what's occurring now isn't a single period transformation. It's part of a considerably bigger change that's still developing, and it's going to influence how financial frameworks operate for years to arrive. As we examine forward, it's significant to comprehend that what's occurring currently isn't brief. It's part of an extended duration change in how financial frameworks function. The transfer toward more information, more computerization, and more instantaneous period evaluation isn't reducing. If anything, it's quickening. Every year, the innovation becomes more sophisticated, the frameworks become more associated, and the capacity to identify sequences becomes more accurate. And that's genuine regardless of governmental matters, leadership, or regulation discussions. The instruments are already present, and they're exclusively improving at completing what they were created to complete. Evaluate financial actions at magnitude. Now, that doesn't indicate the regulations themselves won't transform. There will persist to be discussions about limits, confidentiality, application, and equity. Some suggestions will transfer forward, others will be reduced back, just like we've observed in the history. But the comprehensive path is precise. Financial participation is becoming more visible to the frameworks that supervise it. And that indicates the practices you develop now, maintaining documentation, remaining structured, comprehending how your funds transfers, aren't just beneficial in the brief duration. They're becoming crucial elements of handling your finances in the contemporary society. But here's the element that is significant most. None of this eliminates your capacity to handle your funds confidently and protected. You are not without power in this framework. In reality, when you comprehend how it operates, you're in a considerably more powerful situation than the majority of individuals, because the dangers we've discussed about don't originate from completing typical circumstances. They originate from completing typical circumstances without precise records or recognition of how they occur. And that's an issue you may resolve. You may maintain documentation that inform the complete account. You may collaborate with experts who ensure everything corresponds appropriately. You may prevent sequences that generate perplexity. And you may remain informed as these frameworks persist to transform. Those are straightforward, useful actions, but they create an enormous distinction. They convert something that feels uncertain into something that's entirely controllable. At the conclusion of the day, you've dedicated your existence developing what you possess. You've received the protection to utilize it, appreciate it, and distribute it without unnecessary pressure or concern. And the objective here isn't to create you concern, it's to ensure you're equipped. Because when you comprehend the regulations, when you recognize what to observe for, and when you possess a precise strategy and position, you may transfer forward with assurance, recognizing precisely where you maintain, if this assisted explain circumstances for you. Regard distributing it with someone who might require to discover it, because a lot of individuals are still unaware of how these transformations may impact them. And if you possess concerns or particular situations you'd like examined, inform me. There's a lot more to investigate when it concerns retirement obligations and safeguarding your financial future.